Good morning. It's November 5th. It's Wednesday. And I'm pretty excited about some information I just received from the Mortgage Bankers Association sent by Mike Sorahan. And basically, it's the decisions that kind of struck down some of the actions the government agencies were taking in the Disparate Impact Rule under the Fair Housing Act. What I'd like to do is just kind of read over a few things with you to kind of give you some history and why people ruled the way they did. And this is a huge victory for the small lenders, medium lenders, really any lender, but especially the medium and small lenders, mortgage bankers out there who can't take on this kind of legal risk and expense to fight this. So here we go. The United States District Court in the District of Columbia this week vacated HUD's Disparate Impact Rule under the Fair Housing Act. The ruling represents a victory for the Mortgage Bankers Association and other industry trade groups, which had long asserted that the department's Disparate Impact Rule left mortgage lenders vulnerable to serious and harmful discrimination claims, even when lenders took steps to prevent discrimination and in the absence of intentional discrimination. That's huge. Okay, so in the American Insurance Association versus United States Department of Housing and Urban Development, the court ruled that the Fair Housing Act prohibits disparate treatment only. Its Disparate Impact Rule, the court said, exceeds its authority under the Administrative Procedures Act. Okay, so really the ruling put the agency into check. The Mortgage Bankers Association Senior Vice President of Residential Policy and Member Service, Pete Mills, said, the Mortgage Bankers Association appreciates the court's decision. Of course we do. The ruling is in line with what we have long believed the law to be and consistent with what we argue in our briefs filed in connection with this case and similar briefs filed in several other cases, he said. In light of this decision, we would expect the government to suspend its prosecution of disparate impact cases, so there's some current ones still out there, pending an upcoming review by the Supreme Court. Okay, so I guess the defense takes, I guess this is the defense. According to the law firm Buckley Sanders, HUD had asserted under its Disparate Impact Rule that liability may be established under the Fair Housing Act based on a practice discriminatory effect, even if the practice was not motivated by discriminatory intent. Basically, if someone feels like they were discriminated against, they could just go make a claim and sue your socks off. All right, we just got to get that stuff under control, people. All right. However, the court, in its review of the Fair Housing Act, said the act prohibits only, or it just unambiguously prohibits only intentional discrimination, noting the act lacks the effect-based language that makes disparate impact claims cognizable under other anti-discrimination statutes. The lack of effects-based language created an unsurmountable obstacle to HUD's position regarding the plain meaning of the Fair Housing Act. Wow, some big words in there I can't pronounce. All right, so we're going to continue reading on some other cases. In June of 2013, the Supreme Court granted in the Mount Holly versus Mount Holly Gardens Citizens in Action Incorporated. The case dates back to 2002 when the township of Mount Holly, New Jersey, proposed a redevelopment project in Mount Holly Gardens, a low-income neighborhood composed primarily of African Americans and Latino residents. The township declared the gardens blighted and launched an initiative to acquire all of the properties through the eminent domain, aiming to replace them with new housing. Wow. We just want to make it a little nicer over here, so we're going to just seize your properties and make you go somewhere else. Sounds like Indian reservations, doesn't it? Okay. Okay, in a brief filed related to that case, the Mortgage Bankers Association and other trade groups asserted that Section 804A of the Fair Housing Act does not authorize a disparate impact theory of liability, and that the statute requires proof of discriminatory intent. They further assert that such conclusion applies with even more force of Section 805, in that the use of disparate impact theory has particularly deleterious effects on the residential mortgage lending industry. Sensible risk-based credit standards, from basic minimum down payments and credit scores required to more complex interactive risk attributes, are highly predictable and of applicants. Ability to repay debt, and the brief said, it goes on, they also yield lending outcomes across racial and ethnic groups that are disproportionate to their share of population. These differential outcomes form the basis for disparate impact claims, even when all applicants were treated fairly and uniformly. The brief noted national data revealed that virtually any lender could face disparate impact claims simply for implementing sensible risk-based lending decisions. I would agree with that. Anyone would be at risk based on one's opinion. All right, so indeed, mortgage lenders have already faced an onslaught of claims with no assertion that any consumer was treated differently because of race or ethnicity, it said. These claims include challenges to basic underwriting criteria and to the standard business practices of allowing employees the discretion in pricing a loan to match the creditor's offer to the customer. Newly imposed restrictions on the lending institution as a result of the financial crisis only exacerbate the problems of the disparate impact theory and liability. Absolutely. It just opens just too many gates and too many doors just for just unnecessary risk to the industry. The risk also asserts that the government's directive credit standards have tightened with clear racial and ethnic consequences, increasing the risk of disparate impact challenges arising from complying with the new standards or from not offering products with less stringent requirements. So is there any way to reverse that on the government and sue them for disparate impact? Absolutely true. And it goes on and on and on. I don't know if I want to read all this, but it's pretty interesting to see how the Mortgage Bankers Association, along with other trade groups, have made a good fight in the lobby and with their actions and letters, especially going in front of the Supreme Court. There was also, I don't know if I skipped it or not, but there's also where there was somebody in, here we go. Let me read this part right here. The disparate impact rule also has the attention of Congress. The House in June passed an amendment introduced by Representative Scott Garrett, Republican, New Jersey, that would prohibit any appropriations from being used by the Department of Justice in litigation that seeks to prove illegal discrimination based on disparate impact theory. Okay, so the amendment with the NBA support stems from the Department of Justice and the Consumer Finance Protection Bureau's $98 million settlement with Ally Financial and Ally Bank over allegations that it discriminated against minority borrowers in its indirect auto lending program. So it's just not the mortgage industry, but it's anything dealing with credit, consumer lending. The NBA and other industry trade groups asserted that under the disparate impact theory, even when a lender takes every step to prevent discrimination and treat all customers fairly and equally, A neutral policy can serve as a basis for sometimes serious and harmful claims in the absence of intentional discrimination. So even though mortgage banks and any creditor out there, anyone who establishes credit, puts in policies and procedures to make it fair for everybody, and it just, the law was wide open that allowed anybody to proclaim that they were discriminated against and take these creditors to court. Smaller lenders in particular will find it difficult to manage this type of litigation risk. Left unchecked, that means if we don't stop this now, disparate impact enforcement could increase the cost, or it would, not could, it would, it will, increase the cost and undermine the availability of credit throughout the economy. And the letter goes on to say. So anyway, congratulations, Mortgage Bankers Association. Thank you for all your hard work and all the people who contribute to MORPAC and to the Mortgage Action Alliance out there. The Mortgage Action Alliance is free to anyone. And also you can go to the NBA to find out more information about the Mortgage Action Alliance and MORPAC. I would encourage you to get involved, and let's continue to gain back the initiative in our industry and drive this thing, and let's get people in the homes, and let's start making some loans to people who need to buy houses. Anyway, have a great day.